Hey everybody, happy Monday. Welcome back to the madness that we are in. Today's actually my weekend, server life. I be working on the weekend, so I've been able to chill. But today we're going to talk about the current state of things because this Monday, the Monday after the Easter weekend, we are even down more bad than we were before. And then I will do like the purchasing of my DCA into the position that I'm building for this month of April. And currently we are down. Today I am down almost $30, 1.47%. Year to date, I am down $100, and the stock market lost at most 1,200 points. Now it's down negative 900 points, but I did the math, and we are down from the year's highest amount. We are down 16%. So we are more than 10%, but we are not in a bear market yet because bear market is 20%. And the profile reflects that. Everything on my side here is red at the moment, the things that I have and the things that I am hoping to get. And then for the life of me, I cannot crack past $2,000. And if you guys have been watching me, my goal for this year is to get to $3,000 by the end of at least $3,000 by the end of this year, because 1,500 and 1,500 is 3,000, and I'm hoping I could get some appreciation and get to like 3,500, but I have not been able to crack that $2,000 mark, even though I have put some money in here. And I'm not exactly sure right now. My buying power is $63 and some change. I'm not sure how much of that, if that's included in this, because if that's the case, I'm even lower. But yeah, what I'm trying to do is stay unemotional. Like if we go into my holdings, Disney, let's see, Disney's down less than $1 year to date. It's down 25%, and my position, I'm down 11%. So even though overall the market is down 16%, I'm still beating it, which has been my history in my 401k as well. Like if it's down 20%, I've been down like 13, but I've never been down what the whole market has been. And I like to think that's because of me. Because I pay attention a little bit more than the average person. Um, but I don't mess with it too much because I know I'm not smarter than the stock market, right? So SPDR is down a dollar and a half, -2%, and I'm -8%. Looking at this, even though I'm negative a lot, it has made me so happy that in January I started investing in VXUS, which is Vanguard's total international stock. I didn't want to, I did, but it was more, it wasn't like a cheap stock like ET, which is $20, and SCHC, which is 30. This one was $60. So I knew my money would not go as long, but I told myself that it's not $30, but at least it's not $100, and you just need to start the process now. And I say that I'm happy because although it's down, it's only down 21 cents, and year to date it's up $2. I believe, I'm not going to go through all of them, but this is probably the only thing that's up. And my overall, I'm actually up 1.4%. And I wanted to highlight this because this marks the importance of diversifying your profile always and in all ways. Your allocation needs to be diversified always and in all ways. So even in my brokerage account, when I started this, after I'd already put in the initial, I was like, I need to do something international. And I took about a week to figure out what I was going to do, to figure out which one was affordable to me, and figure out as much as I could about this international fund. And, I'm a dividend investor. This fund gives a dividend. Let's see if I can find some information about it. Because sometimes you do. Let's see. Price to earnings ratio. It's not saying anything, but I know I wouldn't have invested into it if I could. And right now I don't know how to toggle between screens. So that's why I'm not, because I don't want to mess up the video. But it does give a dividend, and it is international. So in my thought process of what I'm going to do for 2026, I think I have to, whether I want to or not, I have to commit that minimum $1,500. A larger portion needs to go into international, because this is an example of how it can safeguard my losses. And when the market goes down 20%, I'll only go down like no, maybe not 6%, but only like 15% instead of 20%. So I'm really excited to, hopefully, God willing, in 2026, build this up, um, and that I'll grow with it, right? Um, let's see. I did also want to talk about how, of this buying power, I did get some dividends between last video and this video. So let me go to notifications. The first one was, it's these two right here, Realty Income and Main Street. So because I own two blah 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 shares of Main Street, I got 55 cents. That's April 15th. And then on the same day, and today is April 21st for reference sake, because I own three blah 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 shares of O, which is Realty Income, I got almost $1 of 92 cents. So that's like $1.47. That is in the $63.97. So because I'm dividend focused, that gave me a smile, because the market was going down last week as well, and I'm like, you know what? It's $1.47 today. It's gonna be $147 in like 15 years. Regardless if the market is going down, which right now the market is basura. The market is basura. And that's why I focus on dividend over growth. And I'm gonna stick to it. I gotta stick to my plan, and when I made the decision, that's what I did. So I'm going to. So now let's go into buying stuff. We're building the position of IRM, and the good thing is IRM is cheaper than it was last week. It was trending up 83. I don't think it's as cheap as I bought it last time. I think it was $80. Let me see. Iron Mountain left. No. When I bought it on April 11th, it was 83.34, and now it's 81. 81.61. So it is cheaper. I will say it was cheaper earlier this morning around when it opened around 10 a.m. It was $80. I'm like, oh, I'm excited. But let me go ahead and pay for it now. I'm putting in my normal $31.25 dollars. It's gonna be 0.38 shares. It'll be queued as Your order will be queued as a market order. It should happen right away because the market is open. So I'm gonna do continue. I'm placing an order. Blase Swaze. Bye. Oh, it's saying it's queued. I don't know why. It's 4:10, but okay. I don't know. I thought it was open. I thought it closed at 4:30, but it'll say upcoming activity. It's queued. That 0.38 will add to what I have, which is 0.76. So I'll have one share and some change by tomorrow, I'm thinking. And yeah, that's where I'm at right now. So my buying power has gone down a little bit. I am trying to stay unemotional because this is part of the process. And I'm doing okay because this is extra money and I'm not putting myself out of my budget of what I can afford. And I'm kind of joyful that I can do this, but I'm also, conscious that there are people hurting for a lot of reasons in this situation. People are losing their livelihoods. And so I want to be respectful of the moment, but I'm trucking along, getting my little cents that hopefully will be hundreds of dollars in 30 years. In my research of personal finance, I've learned that when you're investing, you have to have guardrails. One of those is allocation diversity. So you have like real estate, like your personal home, which I'm grateful to say that I have, my 401k, and I have a brokerage. And honestly, y'all, I have something that I think is coming up that's going to be big that I'm going to talk about this week in my regular Thursday video. But that's one part of allocation. And another reason that I'm not freaking out is that there's also guardrails in the allocation based on my age in this brokerage account and in my 401k. So I am, God willing, a lot of years out from my retirement, right? So I can have a lot of stocks and not so much bonds, but every so often that should change. Every 5 years, every 10 years, the allocation should change where bonds go up. Wait, bonds go up. No, we're like this. Or let's say the stock is high and bonds is low. Bonds go up and stocks go down. And I have a personal timeline for when I do it, the intervals. And so that's one reason why I'm not freaking out. And because I know, regardless if I was high on the highest of mountain peaks and it's going good, I make sure I change that allocation at my set intervals because I'm not going to be greedy. And then so by the time that I get to like my 70s or 60s, that allocation is already going to be mostly bonds, right? So I should not be that concerned. And then I'll also plan to have 3 to 5 years of cash from this and all the other things I got working out. So that's why I'm not freaking out. I'm trying not to be emotional. And I'm doing that based on personal education that I have searched out for myself, and it allows me to relax. But it is interesting to see. It is daunting to see when I woke up and checked this morning, and that thing was negative 1,200 points. That's not good, but you know, one day at a time. Thank you guys so much for hanging out with me, and I will see you guys next DCA video. Talk to you later. Let me know how you're feeling about this steady decline we're going to. We're at 16%. We're not too far away from a bear market. Are you changing your practices or are you staying put? Let me know, and I will see you guys next time.